Well, good afternoon, Maverick traders. Welcome to the Market Roundup. Joe with you here. It's the 26th of February. It's another Wednesday, and boy, how Wednesday to Wednesday can change. I've got my 2 cents. You guys know how this works. Take responsibility for the outcome. Let's take a look at some of the meaningful news of the day. Let's look at the markets technically, and I've got some trades that we can share with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that we actually started out with a pretty decent gain, trying to bounce after a pretty big slide. But we actually came back to close flat. Let's get into the daily news. So the market volatility continues, trying to see if the markets could actually find a place to turn based on a support level in a range. What happened today? Well, guess what? More tariff stress. This time it's a possible 25% tariff on the European Union. Also talking about maybe copper being taxed coming in from other countries. We don't really have any control on what goes on, but I should let you know that it's not going to stop anytime soon. So we should expect more of the same. So how do we finish? The Dow down 0.43%, the S&P flat, right? In line. The Q's actually up about 0.25%, and that actually came towards the end. All three of the majors were actually up in the morning and then just kind of stifled downwards, and I do believe it was digestion of more the same, more tariff stress and more worries of, or I should say, instability in not knowing what's going to happen next. What we can do is just follow price action. That's about it. Russell's 0.13%, so flat. Oil and gold flat as well. All sorts of volatile moves up and down. The yields themselves slid again. Boy, I think 4.25%, actually maybe even lower than that, as some of this tariff worries are really starting to take a toll on them. So let's take a look at our advanced decline line. 54 advancing, 42% declining. It's a lot of reactionary move, and things that have overextended themselves have been really crushed, and things that are really low have had some pretty aggressive bounces. That's kind of all I'm seeing. Anything that's slightly higher, slightly lower seems to stay that way. We'll take a look at it. So above, below the 50-day moving average, it's still that 50-50, 47% above, 53% below. Let's just get straight into the chart. This is where we talked. And folks, I talked a lot about this ascending triangle pattern, a bullish flag pattern, the breakout. I talked, hey, I'm going to be here. I'm a +2, and this is I'm a +3. And folks, I was a +3 for exactly 1.5 days. So at the end of the day, it broke this 20-day moving average. I had to kind of not bear it up, but at least button down and bring it down from a +3 to something a little bit more reserved. This is why I love not throwing all my eggs out in one basket. We've been talking a whole lot. This is not the markets to build a portfolio in. I've been touting for days and days. 3 positions, 5 positions, 6 positions at most. Do not throw them out. Shorter term, smaller positions. I can't get a good read on strong sectors, weak sectors. And folks, this is it. This is exactly what we're seeing. But when it does correct, it corrects it very aggressively. A false breakout, sucking in some people and then wiping it out. Now, as trend traders, we can dip our toes in. We don't have to dive in head first. Where do we sit now? Well, I like this area that we talked about. That Rob brought this up yesterday. We're in a range. I know that we dropped below the 20 and the 50-day moving average, but we do have some shadows. We do have a market that actually climbed all the way back up to close pretty much flat or positive for the day. Doesn't mean we can't roll over and fall apart. If that happens, then definitely we'll have to put on our bear hat. But don't take them too seriously for now. Let's get to the Qs. Same idea. We're still in the midst of earnings season, folks. In fact, I think we've got NVIDIA coming out, Salesforce. I'll get there here in a second. But we still have the same idea, the same range. Big corrective action, large volume, big reaction on news when it comes to, hey, the tariffs are going through to Canada and Mexico. Today doesn't help with the European Union being a 25% tax coming up on that. So there's all sorts of things to worry about. However, we just kind of have to play the price action inside of that game. If you're uncomfortable with it, you don't have to trade it. So the Qs and the SPY are pretty much in the same spot. Let's take a look at the heat map and see what was affected. And you're going to see it's more of the same. So let's get into my market outlook, as it was kind of a fun one. I haven't done this for a little bit, but boy, for me to go from a +3 down to a +1 is pretty big. Now, this is where I was, folks, when I talked to you last at my +3, and it slid down. I'm still positive. So I'm kind of trusting in the motion of the ocean to say, hey, if we can stabilize here and move higher, I'll keep my +1. Now, I'm at a 0 for the week because of this. Now, if we roll over and start to fall apart, well, then I'm going to have to slide down to a 0, -1, and my weekly outlook will go, and now it's out of favor. So overall, we just got to see if this is going to stabilize at the support level or it's not. But I don't want to be too reactionary regardless, or I should say irregardless if it breaks or bounces. So I do want to share more trades. I went out to what was strong and what was weak over the last week or so. So I'm still having a hard time seeing anything completely bearish or anything completely bullish yet. I got Cisco here tech-wise. I've got CVS, SNY, Sanofi we'll take a look at, both in healthcare. Down on the bottom, okay, let's go for it. Let's go to the consumer side. I got Target and Hormel Foods. So let's take a look at them. First off, folks, I want to take a look at Sanofi. Now, we talk about, hey, the markets were up, the markets were down, we got reactionary move. Okay, a little bit of a gap down, a little bit of a gap up. This is all that volatility. Now, I've seen stocks, go out there and look. Any stock that has been racing to the moon has just dropped as fast, or anything that's been beat down. A couple of the trades that I had as bears over the last few weeks have had substantial bounces. What I'm looking for is something that doesn't really move too much up or down, and I would like to play it in that direction. A few trades we talked about in the past that I still like that I'm in. Starbucks is a good one. The XLF sector had a little bit of a corrective action, but it's doing pretty good. There's a couple out there that are boring, for lack of a better term. But I like this. A little bit of a high base. It seems to be creeping up a little bit. Not a lot of volume or follow through. So, hey, could this easily roll over and fall apart? Sure. So could everything. But if it's a trade that you're looking for, you just don't want anything too reactionary. Let's go over straight to the bear side. Similar. This is Target. Walmart has had a substantial run to the upside. It had its earnings. I don't know if they're in line or not, but I know that they projected a little bit of worries when it comes to consumers to 2026. They did drop, but they are kind of meandering sideways. But Target has had this slow, steady slide for quite some time. It doesn't mean it's not going to bounce, but I do like it if you want to play something kind of sideways to slightly lower. Now, we do have some pretty good support that it's set back here in November, but once again, I am not looking to add positions to my portfolio here. It's just been an interesting ride as of late. All right. So let's get into kind of the overview here. So the markets are at major support levels, right? We got that range. It was a really good candle to see. I thought that gap up was going to continue. We'd have a good bounce, but it rolled over and fell apart. It was interesting to see that it actually closed flat. We'll see if that rolls over and falls apart. I truly believe, folks, it's going to be based on policy. I think we're on our way out of earnings season. Real quick, we'll go through a couple that are coming out here that are huge, but it's going to be policy. And every time I see a policy change, I see reactions in a market. I see reactions in stocks that are going up, they go down, and then the next day they go right back up. So it's a very difficult place to be and a difficult place to trade. So large reaction in anything that I've seen very high or very low. We got to scale it back and see if we can't quietly do some trades. If not, we just got to sit back and see if we get something a little bit more clear in the future. Thursday, we have the unemployment claims and the prelim GDP. GDP, I don't think makes a hill of beans difference. They revamp it all the time. But I do think that PCE number might be a little bit interesting, depending on what policies change between today and tomorrow. All right. Okay, so earnings season, we got NVIDIA, Salesforce, Snow. Oh, geez, look at this. Agilent. We got eBay. Let me take a look at some of these while we're here. I've got NVIDIA flat right now. I don't think they're out. Let's take a look at Salesforce. Looks like Salesforce is out. They're down about 4.33% currently. Now, folks, this can change by the time you see this. Let's take a look at Snow. Let's see, Snowflake. It looks like Snowflake's up 9.5% right now after hours. Agilent down 3.77% currently. And one last, let's take a look at eBay. eBay looks like it's down about 7 7.33%. Let these things play themselves out, and then take a look at them with a fresh set of eyes as you guys move forward. All right, guys, thanks for joining me. Quite a difference between Wednesday of last week and today, but that's why we position size. That's why we follow our plan. All right, folks. Talk to you next time. Bye, everybody.